Good evening, everybody. Good evening, everybody. Welcome to the trade recap for August 13th. I hope you are all doing well. Good evening, everybody. Yeah, so we had an interesting trading day today. It was really cool trading day. I'm happy to share what we traded today and how we manage our trades accordingly. And also I'm going to share some what I'm watching for tomorrow, as we expect to see the PPI inflation number and also the jobless claims number. And we'll have like a game plan for that. Okay. So without much ado, I'll just go ahead and share my screen here and show you the trades that we took today. So my name is Rich Lejay, with Trading Rich, and I'm going to be showing you guys some of the trades that we took today. So first off, this morning, we were watching SPY. So we got a gap up here with SPY at pre-market, and these red lines were lines that were marked last night and night before. These were mainly levels based on expected move. So expected move is the move that the options market predict that every stock or ETF is going to move with a 68% probability. So now that we are in all-time highs, it's difficult to know where price is going. So price is now in what is called price discovery, right? Because he has to discover a new price to know where it's going. So sometimes it's difficult to know which resistance level you're going to use because there's no resistance level that has been reached yet. Okay. So there's no past data for you to use. Okay. So over here with SPY, we had these levels already set up. These red lines was from the pre-market session, pre-market game plan. And at the open, I told members that we had the pre-market high, which was somewhere here, and this was the pre-market low, right? This was this level here. This was pre-market low. Pre-market low was all the way here. Yeah, pre-market low was all the way here at the time. All right. So I'll just mark it here with a different color just to show you guys here. So at open, what we realized was that at pre-market, we got this move to the upside and we were in the uptrend at pre-market. So I told members in the game plan that at the open, we are going to get two types of moves. One is that if we blast through and we push up, because here at the pre-market session, the market maker was telling us that this is consolidating at pre-market just a few minutes up before the pre-market, before the market open, which is 1, 2, 3, 4, 5, 6, 7. So this is about 35 minutes before the market open. It was consolidating, right? And this here is a bull flag. Okay. So with the bull flag at the open, the probabilities is showing that this is going to pop at the open. Okay. So at the open, what do we get? We got a pop to the upside and then it stalled out here, right? I also told members that there's in technical analysis, there's something called time count. And this comes in handy when we are trading at all-time highs. So at all-time highs, usually we don't know where price is going to go. Like nobody knows how. So at pre-market, there isn't like at all-time highs, nobody knows where price is going. So what we do is that we use certain things, certain tools or levels to gauge, right? One of them is expected move. The other one is to use time count, right? So you count the candles. So here, this is the 5 minutes time frame. So I told members that, at all-time highs, we should look to count the candles, like 3 to 5 candle move. After every 3 to 5 candle moves, you have to look to pay yourself. You have to look to take profit. But luckily for us, we had the expected move levels. So that give us some kind of direction on what to do. And then we use that to trade this accordingly. So if you count here, you can see that you have one candle, number one. This was at the market open 9:35. Candle number two, three, four, five. And then where did price stall out here, right? And it went exactly to the expected move area, right? And what did you do from there? Price sold off and came all the way down here. So at the open, we caught the long to the upside and then guided members to get the short to the downside, targeting the gap fill. So the gap fill was an area where we're expecting like price could come to that area and then we can possibly get a bounce. So this short here, first profit target was to sell at the 50 EMA, which is this red line. And then if you get a follow through to the downside, you can target pre-market low. And then from there, we can target the gap fill here, right? And then from the gap fill, see what happened here. This was like a confirmation of reversal, which is an inverse head and shoulders pattern. And here, what do we get? Price went all the way to this area, right? And then close the day at this point. Okay. So the take-home message here is that at all-time highs, when nobody knows where price is going, when price is discovering new price targets or in a price discovery mode, some of the ways where you can use to get your resistance levels is to use expected move. So expected move is like prices where the options market makers have generated based on probabilities, right? So with a 68 probability that price is going to get to that point. So using that together with time count, you can know when price is going to and where things are going to stall out for you to sell and take profit. So that is the take-home message here for this pie trade. Okay. Another trade that we took as well was IWM. So this one was I took this one late in the day, late in the morning. So this here, because we got a light CPI number on Tuesday, going into today, we were looking at IWM because if you look at the other indices, like the SPY has gone to all-time highs, the QQQ has gone to all-time highs, the DIA has gone to all-time highs. The only index that hasn't reached all-time highs is the IWM. And IWM is interest rate sensitive. So if interest rate is going to be cut in September, then we are going to see a lot of smart money coming into the IWM to lift up IWM because IWM hasn't gone into all-time highs. And in terms of a risk to reward basis, there's more room for this to go compared to creating something like a SPY or QQQ. So if you look at this, IWM is about 5% away from getting to all-time high. So there's lots of room. SPY, QQQ have already gone into all-time high already, and IWM hasn't gotten there yet. So here, if you look at this trend line here, this trend line here was a 2024 trend line, and that trend line was broken on Tuesday when the inflation news came. And this morning, what happened is that we got a gap up above this key level of 226. So what I was looking for was that I didn't trade this in the first hour. I traded this later in the morning, where here I targeted. So at the open, I did not trade the open. I traded this around 11 a.m. Eastern. So when price came here and confirmed. So here, this is a confirmation pattern of a reversal. So you have here, this is your low, this is your higher low, and then price bulleted up from there, okay? So I bought the 231 calls expiring on Friday because I was targeting this uh resistance level here, which was 230.90, which is approximately 231. So I bought I bought it over here at this confirmation and then rolled it up all the way and sold it before the market closed. Okay. So that trade returned 250% before the close here. So I closed this position at 250%. So basically what it is that if you put in $1,000, you made 2,500 profits, right? And if you put 10,000, you made 25,000 from it. Right? That's how you can use the power of options to make exponential gains in the market, right? Yeah. So this was a call option trade, speculating for up move. Okay. Then our trade of the day was AMD. AMD though. AMD. So our trade of the day was AMD. So AMD from their daily charts, AMD showed signs of a breakout, some sort of a breakout. So here you see this is formed inverted and shoulders, and this formed what looks like a cup. And this here was forming a handle. And actually, this was like on the daily chart, this looked like a flag. Okay. This looked like a flag, and then this is the flagpole, right? So this morning we got a breakout of that. So we're targeting 188 as the key area because this has been a key resistance level for AMD. Okay, if you look at it here, the last time price came here, price stalled out in um, July 2024, and then last time price came here as well, price stalled out in March 2024. Right, so this area has been an area of weakness for AMD. Anytime it gets there, it hits that resistance and it sells off, right? So here, what we are looking for is that we're looking to get this move and then sell over here. If it give us follow through, that's great. It can give us the follow through. So let me go to the intraday to go through that quickly here. And then I'm going to go through. So here at the open, right at the gates, right? We got this bullish engulfing candle. So entered the trade here from the bullish engulfing candle here and was targeting here. So usually when you get a move like this, right? Usually when you have a back-to-back level, usually the stock stalls up halfway through. And this stalled up halfway through here. And from there it sold off. So we captured only the long to the upside. This was like a 6 points move, almost a 6 point move. 5.97 move. And then we sold here, sold the position here, and allowed things to play out, right? I didn't go for the shots because this was more than enough in terms of the move. So this move here we targeted this move here was a $185 cost that returned 490%, 490% gains on this. And this was a beautiful trade. So this was the first hour trade that we took for AMD. This was done by 10:25, 10:20 thereabouts. We're done with this trade, and then we signed out from it. Right. I didn't catch the puts to the downside because I was content with this long today. So going into tomorrow, what I'm looking at, one stock that I'm looking at is AMD. I'm going to be watching AMD closely. And one of the reasons why I'm going to be watching AMD is that if you go to the daily charts, I'm spotting something on AMD here on the daily charts. So this level, this critical level, this 188 level, okay? This 188 level has been a problem area. So you see here, it came here close to this once, twice, 3 times, and 4 times, okay? So what needs to happen is that if tomorrow the job numbers, so let's see what is in stock for tomorrow in the economic calendar here. So tomorrow, there's important catalyst coming up, PPI, okay? PPI inflation and the initial jobless claims. So the market is going to be watching this initial jobless claim number closely. The forecast is 229,000. If this number comes in higher than this forecasted number, then we are going to see a sell-off in the market. Okay. If it comes in lighter than it, then that's good news. Then the market is going to continue trying to rally. And then, things are going to be going up as usual. But if this number comes in hot, like 230,000, 250,000, 240,000, that's going to cause the market to sell, right? And PPI is something that can also affect the market because the Trump tariffs has not been felt in consumer price index, which is CPI. We've not seen that reflecting the CPI. However, I think that is going to be reflecting in the producers index, right? The PPI, producer price index, because most businesses are 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 taking on the tariffs and then absorbing it into their businesses, right? So what's going to happen is that we are going to see later on, maybe later on in the year, that businesses are now shifting that tariffs cost to consumers. We've not seen it yet reflecting CPI, but I believe that it will start reflecting in PPI very soon. So we shall see how that works out um, tomorrow to see if it reflects in the PPI. But the main thing that the market is going to look at is the jobs numbers. If these numbers comes out worse than expected, expect the market to sell off tomorrow. Okay. And yeah, so that's what I'm going to be watching tomorrow. So if that's the case, so I have two game plans. If tomorrow, right, AMD gaps up above this 188 level, then you should position yourself to go long. So first off, what's going to happen is that if we get a gap up tomorrow in AMD, what it can do is that it can come and retest this key level because this has been a resistance. So it's going to be resistance then support. So I call it the SR flip or RS flip, right? In this case, it's just being like a flip, like SR flip, right? So this is going to be resistance 10 support, right? So it's going to gap up here and then it's going to look to, so the bulls are going to look to ride it up and we can get a big move to the upside, right? So over here, there's nothing really. If this gaps up tomorrow, we are going to get next profit target to be 193, and we can come as close as 200 tomorrow, depending on if the job numbers is good and PPI is good, right? However, if the market is weak and shows weakness due to the job numbers, then AMD will look to sell. It's going to pull back, right? At least AMD can pull back and come here to this area. So we are going to look to short AMD in that case. It's going to come somewhere here, maybe to 175. So at least we can get maybe a 10-point drop on AMD or 5-point drop, whichever one, right? On AMD. So it's two things. If we gap up, we are going to look to go long. If PPI and jobless numbers is weak, we are going to look to go short this to the downside. Okay. Yeah, so that's AMD. That's AMD. I'm watching AMD closely. So we've seen that today the smart money were rotating, they were exiting, they were selling stocks that are super extended, like Palantir, that has gone how a lot. Nvidia, even Nvidia is even selling, right? So tomorrow, if the PPI number and job numbers is weak, we might see some cracks in Nvidia, right? Maybe sell to this area and then wait, right? I don't think it's going to break this because this hasn't broken in the longest time. But if numbers is good, this can continue going up, right? So interest rate sensitive stocks, we saw them really do well today, including the IWM. One ETF that I'm watching as well is the biotech ETF. So biotech stocks are interest rate sensitive. Okay. So if biotech stocks are interest rate sensitive, then you know that the biotech ETF is going to show strength. So over here, this has been trading below the 200-week moving average. And today it made a milestone where it broke above and it closed above the 20-week moving average. So this still has legs to go. I believe that this can rally in the days and weeks ahead as we approach the Fed rate cuts. So if you go to the Fed website this year, Fed Watch Tool, you go here, look at this. So we have right now we have it's showing 93% chance of interest rate cuts, right? Earlier on in the day, it was around 99.99%. So it means that there's going to be surely interest rate cuts coming up in September. That's going to be September 17th. So from now to September 17th, expect this ETF to rally. So over here, you can see that this has put in on the weekly time frame. This is a weekly time frame. This put in a triple bottom, right? Put in a triple bottom here. Oops. Put in a triple bottom here, and it is doing what? What is it doing? It's reversing, right? So I believe that from now to this is interesting. I didn't even see this one. Look at this. So here, wow, this is one, two. So 1, 2, 3, 4, 5, right? This is called a penta bottom, right? So 1, 2, 3, 4, 5, and then now we are going to get a breakout, right? So here I expect this to continue pushing, and we are going to get a breakout. So in the weeks and days ahead, this is a weekly chart. Expect this to come to somewhere here in $95. So this could be a very good one for a swing trade. So a swing trade, you buy yourself time. You buy yourself to maybe October. Buy yourself into October, like so. Go beyond the rate cut date. The rate cut date is on September 17th. So you can do something like this, October, right? So you get this $95 calls, and then you can hold it. Again, this is just for education purposes. This is not financial advice. So this one here, $95 calls expiring October 17th should do the trick, right? And then we can push here to this area. And if we go and check the expected move, that's what the market makers options market makers are predicting that this is going to go to from now to October. So let's see what expected move is. So even from now to October 12th, this we are expecting expected move of from now to September 12th, the expected move is 94. So this is going to work. This trade plan should work nicely, right? So if we can get it to come here, that's going to be fantastic. That's going to be beautiful, right? Then you can sell over there, or you can shoot up from there. So from now to September 12th, September 17th, we can get this XBI to come here. So biotech stocks are going to rally. Okay. Right. So yeah, so these are this some trades that you can look at. This here is a swing trade. Buy time on it and allow it to play out. Okay. Yeah. So yeah, so that's about it for tonight. I hope you guys learned something. We learned about time count. We learned about how to generate your levels when we are at all-time highs. If you don't know where price is going, you can use time counts, counting the candles, and then you can also use expected move to generate your levels. That way, it's going to give you some kind of estimate on where price is going with a 68% probability. Okay. So yeah, so have a good night, guys. So all the best with your trading tomorrow. I wish you guys all the best. So we shall we shall talk again in tomorrow's trade recap. Okay. Have a good night. Bye for now. Bye bye.